Gold just consolidating. The yellow metal closed below $1,800 after trading in a tight range for most of the week last week. Gold rose around 0.5% on the week, and that was its first weekly gain in about 4 weeks. Also, the new Basel III rules are set to come into effect on Monday across Europe. And under these new rules, which were designed in the wake of the 2008 economic crisis, these rules are meant to create more stability in the financial system by incentivizing banks to hold less risky assets on their balance sheets. And so underneath the new rules, they distinguish between allocated gold and unallocated gold. So allocated gold would essentially be reclassified as a Tier 1 asset from its present Tier 3 classification. And a Tier 1 asset is just like cash, so it's considered zero risk. That means that physical gold will now be the same as cash on the balance sheet. But unallocated gold, known as paper gold, or forward paper contracts, or whatever you want to call it, these will not be classified as a zero risk asset. So you're really what these rules are doing is they're creating a difference between allocated gold and unallocated gold. And these new liquidity requirements aim to classify paper gold as more risky than physical gold, as it well should be. So investors are hopeful that this will encourage more purchases by financial institutions of physical gold and a less of a reliance upon paper versions of that gold. So we'll just see what that all shakes out to be. If you listen to some of the different experts, some people say that it's going to have a meaningful impact upon the demand for physical in the physical market. Others are saying that it will probably have a minimal effect. So the proof will be in the pudding. We'll continue to watch this market as we have for many, many years, but lots of tight consolidation here, which typically resolves in a breakdown or breakout. We'll be watching gold next week. Gold is down about 2.5% since we issued that last uptrend alert, the position uptrend alert, back on May 7th. And we're facing that 200-day moving average and 50-day moving average, which are coinciding here. Those two areas are going to be, overhead resistance for here. We continue to monitor the key support right around 1675. That's a key area on the gold chart. Physical silver also holding its ground last week, hovering at its 200-day moving average after tumbling nearly 8% the week prior. We were consolidating right here just below a 28.50. You may recall that. And we were holding the 30-day moving average. Well, the week prior, we had a pretty hefty sell-off in the wake of the FOMC policy statement. And then the price came down and just hovered right at the 200-day moving average. So it's been grinding sideways, just looks a lot like gold last week, just grinding sideways there. And maybe we'll get a lift off there, but watch for a potential 200-day moving average breakdown next week. We'll continue to monitor this. The broad consolidation remains between the 30 area up here all the way down to the 23 area. So it's just a lot of sideways grind here for physical silver. There's several factors that are still driving the current uptrend. We are still in a position and long-term uptrend for silver, so we haven't lost the uptrend yet. We have rising inflation that still has not gone away, clearly. Low interest rates, which are just literally a fact. Growing renewable energy demand, which just continues to grow, which is beneficial to silver. And big infrastructure spending plans, which is also going to be good for raw materials. So silver well poised here, but let's watch the 200-day moving average next week.